increase of 25%. It's a strong growth in cash, because a lot of that cash is coming in Kenya, coming in South Sudan, across the region, strong growth. But I'll say Uganda, Rwanda, South Sudan, and Kenya, strong growth. We're looking at the other areas as well. Loan and advances, 25%. Kenya is growing actually, at that level, slightly higher, and some comments here will give some feedback on that. The rest are not materially. Fixed assets, other assets are not growing as fast. The composition is 58% of loans and advances, 24% of security. So if you add those two, those are the interest earning assets. Just a slight reduction this year from last year, but because we have a stronger growth in cash balances by 4.5% from last year. It's a good story in terms of loan growth. And a lot of these loans, people may say, okay, the 1 billion on mobile loans is very small, correct? But those are 120,000 new people who never had access. And for me, I love them because it is sometimes it's 500 shillings, sometimes it's 200 shillings, sometimes it's 10,000 shillings. And they apply the loan. If you dial your 522 hash, you get into your mobile banking, you get your pre-scoring, you get your loan applications, you get the money back the same day, and you pay the same way. So that growth, just different sectors of the economy. You may have asked about, agriculture, construction, manufacturing. Real estate is much more the mortgage side of the business. Construction is more the roads, the power sectors. Others include tourism. Agriculture we picked it in. It's not too big, but it's something we're continuously growing. Non-performing ratio is very important, coming down to 6.3. And I speak about this. Maybe you can answer a little bit much more. I explained it to you much last time. I don't think it's really understood. And let me just give you the background. Banks lend on security in these markets. So we offered a 12.9% mortgage last year. We've cut down our reference rates for our corporates last year as well, because we are committed to support the vision of government today and our customers on interest rates. I think it's important to see that as a point of emphasis. Our own average lending rates as a bank are coming down to around 14%. Industries at 15.9%. And I look at this at the central bank data every single month. Check the website. You can see large banks, medium banks, and small banks. Something we are very much happy about. I want to pick up only one issue. So non-funded income I've explained. Provisions for bad debts. As a bank, we've decided to take up an additional 2 billion shillings provision for our debts this year. It's to increase the level of provisioning that you ask these questions. I saw it a lot on the papers and the dailies last 2 weeks ago. It's not that we are not provided, but I think we have committed to start increasing the level of what you call coverage ratio to a level of 60-70%. So it's a deliberate attempt for us as a bank to say, okay, we can still grow at 18%, which is a very strong growth in my view, but being able to put up some provisions this year. So we are addressing the concern that you've raised, but I also say that it's not a concern after all.